we doing, my little shit weasels?
Hello, hello. Hope everybody's doing well. The usual bullshit. Love and miss you all. I've been a little quiet this week just because I've been doing my own thing. The charts weren't all that great as they were 2 weeks ago, but I think that we're close to continuing that exciting trend. So once I get my fucking hair down,
we'll get right into the shit show. All right, so let's have a little look-see-do at the fucking charts over here. So I got a couple things I'm working on. I had a really cool, I guess, introspective little brain dropping. Basically, I'm writing indicators. I mean, they're indicators technically, but there's different ways that you can describe it. I'm writing pseudo algorithms, pseudo code, I guess, to basically figure out what the fuck is going on. And you know, it's people always want to deflect anything that's going on is just manipulation or fuckery or this or that, and that's fine to an extent. But don't use it as like a crutch for you just blatantly not caring or having any interest in trying to combat what is going on. A lot of the little shit weasels in my fucking Twitter mentions will be like, oh, you make a prediction that it's wrong and then you blame manipulation. And I've never, ever, not once, have blamed manipulation for a forecast being wrong. In fact, it's the complete opposite. I build my forecasts off of the assumption that it will be manipulated. It's fucking amazing. You know, like I'm about to have Dana just make like a hypercut of me in my hyperboles when it comes to fucking letting out my frustrations about people. Nothing that I have ever, I don't like to give excuses ever. So when people are like, well, you're just going to blame it on manipulation. No, you fucking stupid, idiotic fuck. That's literally what all this is about, is I'm using that manipulation as the telltale signature to what is going on. So anywho, back to my original, positive approach to this fucking video. I'm using this quote unquote manipulation. I'm tracking its footprints, basically, as the wise words of Bam would say. And I think that when you use that approach to try and work backwards in this case, as in working backwards to the solution, that's where the key lies in all of this. You know, a lot of people will, again, deflect. But at the end of the day, if it's manipulated, that means that there is some form of oddity or something that stands out like a fucking sore thumb when it comes to how things are supposed to behave normally. So when people fucking, oh, it's manipulation, you deflect it to that fucking placeholder excuse. That's actually the key to this, is when you realize that the thing that isn't behaving normally, for it to not behave normally means that there is something that is abnormal. And when you can find where that abnormality occurs and then find a pattern to it, there you go. So anywho, let's get into the fucking forecast. Let's talk about... Fuck. Let's go ahead and get right into the news. Let's talk about this week's forecast. Fuck. Okay. Let me hit my sweet, sweet nicotine real quick. There we go. Okay. So, a couple of people have been keeping track of what fractal we're in. We're going to go over AMC first. For a long fucking time, I'm going to switch to Hike and Ashy just to illustrate my point, and I'm going to hide all the indicators. For a long time, my idea is that we were basically creating this pattern that we saw from mid-May, early May, going into late or early June. This formation, when you blow it up, I think I can go to the 15-minute is the furthest to let me go back. If you blow up this pattern, this is basically what I think we're in and have been in since the fall in June, mid-June. I'm even going to do a bars pattern for shits and gigs. I know some people hate these, But you see, I learn a little bit. I do the best I can to learn from past mistakes. I'm not going to use this as a crutch, as a loose demonstration to say this is what we're doing. I'm instead going to postulate instead that this seems to be kind of the overarching theme to what has been happening. But rather than having an ascending wedge that you see here, this was actually descending, which is understandable. But I think that the intermittent accumulation area that we see is basically what we've been going through. Basically from July to now is what this has been creating. So it's kind of like, again, as Bam would say, or TWE, you either have your megaphone or your projector model is the way that you can think of it. So basically everything that I highlighted here is this stretched out minus, instead of the ascending wedge, it is a descending wedge. But basically it's just reforming that, which is also a classic Wyckoff pattern. In terms of what this week was, this was just a giant fucking descending wedge, also with descending volume, which is huge. Whether you look at it in terms of Wyckoff or just standard technical analysis, whenever you have a falling wedge with low volume, that is a bullish signal normally. And the reason for that is because someone is walking the price down, anticipating a buyer at some point in the near future. So with that in mind, let's pull off the Wyckoff snippy snipe. And I also have another thing I'm working on. Going back to my point earlier, I'm basically just writing napkin software to figure out what the fuck is going on. So I've got 2 more indicators that I have being worked on. I have what are called FTD delivery dates, which I'll get into in a second. And then I also have what's called short shucker. And short shucker is really cool. It's actually in the very, very early stages of development. It's basically converting on-balance volume into moving averages. And then I'm also going to incorporate short interest as well as short exempt volume as like auxiliary metrics. And I'm going to run the moving averages of volume, green and red, against what the short exempt volume is in terms of difference to total volume. Each day, you typically have about 50% of your volume being short sales, which is normal. That's a liquidity thing. But when you'll start to see that the difference between short volume and overall volume, as things start to enter into a squeeze territory, you have high short interest. And instead of being like 50%, just rough numbers here, instead of 50% short exempt, or not short exempt, instead of 50% short volume, it'll start to creep to like 49, 48, 47. And this is kind of like a wink, wink, kind of like a head nod signal, if you will, where market makers are even being very tedious with what they're willing to allocate short shares to. And as you approach into a squeeze territory, that number will, like a descending wedge, fall from 50% to 49, 48, 47. And then 1 to 2, maybe 3 days before, you'll see it spike. And when that spike happens, that's again just like your descending wedge, where they then realize, okay, let's get the liquidity pumping, let's get this thing moving, and that's when you see something happen. So the yellow line is a short-term exponential moving average of volume. The blue line is a long-term simple moving average. So whenever you see these crossover, there is some significance to it. But you can even see with the most recent move that we've had over the past couple weeks. What? No, get the fuck out of here. Even within the past couple weeks, you can see that the volume has been declining and it's actually approaching a floor. What the fuck? Okay, that's fucking lit. Anywho, it's approaching a floor, which is typically around here. This is also, I know I'm all over the place, so forgive me. This is also a part of a pseudo model that I'm working on, where I'm trying to derive a total theoretical short interest based on the minimum amount of volume that market makers will ping back and forth. And this factors into days to cover. For anyone that has been following that spoke of my approach, this is also incorporating that. So anywho, back to actual actionable information. this is looking good because we're approaching the floor, which means that it's eventually going to bounce off that floor, which means that we'll have a surge of volume. And right now, with the position that short interest is in, as well as just what the technical movement has been over the past couple of weeks, that is an extremely bullish sign. On AMC, I'm going to clear this up and just get back to the snippy snipe. So this is a different view of the sniper. You're used to seeing the clouds. What I'm doing now instead is I just have the moving averages of our spring and UTAD zones. So basically the highest of highs and the lowest of lows, represented as speed lines. So basically, if you see any of these lines overlap, they each represent a different length of time. The longer amount of time a particular line is, the more powerful it is. Again, shout out to Bam, Uncle Jim, for helping me learn about all this shit. So as these begin to overlap, that produces a lot of upward pressure. And as price actually pushes through each of these levels, again, that's just more and more pressure going up. And you can see just, if I go to the daily here, that we have pretty much a very, very, very solid floor. I'm actually going to switch to the 1 hour. Yeah, so this is what Bam would call a, what is it? Not a triple wind up, as cool as of a name as that sounds. Triple cluster, a three signal cluster, I think. But basically, if you look, I'm going to try to stop saying basically. You can see here, though, that of the 3 speed lines that we have, all of them have clustered up. And when one of them leaves, typically that will signal the rest to go up with it. The thing that's actually driving these lines is just price movement, but it all has to do with where the spring levels take place. So anytime you see a green region, and as this climbs up, anytime they get clustered, it becomes more and more momentous. The inertia of one will typically carry the rest. And then once you bust through, where's my fucking brush? What? There it is. So once we bust through the red lines, that will give you a huge move. And you can see that happen back here when we took off from 1450 all the way up to 34, which, by the way, that was a 100% move. Just so people are at least a little aware of what's going on. I think that people have discounted, and for obvious and good reason, people have discounted the move that we had. Going from 1450 up to 34 is a 100+% move. So that is something to consider. And same thing with GameStop, by the way. Something very, very, very much to consider. So, this is only going to get higher in the very near future, I believe. So just something to keep in mind. So yeah, in terms of like technical patterns, you have your descending wedge, low volume. We actually caught right here, and we're descending back up. If we go back to the lines all the way from late May, you can also clearly see that we caught around there. Where the fuck did this go? There's a particular line I'm looking for. It's either this, or... Oh, you stupid fuck. Yeah, so basically once we, I know this is all over the place. Forgive me. So the 2 lines I have up basically go all the way back to January. And when you see any chart catch back onto a trend that was from a very long time ago and had a lot of upward movement, this is indicative of urgency at those price levels, because basically you have a trajectory taking place that extends into the future. And after a price catches onto that from the future, you'll see the same momentum carry with it. And this all has to do with like where certain institutions hold or where certain institutions sold. It all has to do with historical levels. And when stocks catch on to these things, it's just like history. It tends to repeat itself, or at least it rhymes. So back to technical patterns. descending wedge, blah, 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 blah. We're catching on to what happened in late January. We also have relatively the same fractal playing out from early May into early June. Shout out to Welch, by the way. He fucking called the fucking the consolidative move for this week. Yeah, so that's Amy. I guess going into the week, I'm looking to see at least low 20s. So that's about a 25% move. Maybe mid 20s. If we hit around that range, that's when you're going to start seeing some more aggressive upward movement. In the event that were to happen, you definitely see something like this, I think. Or you would consolidate back down into the low 20s and blah, 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 something like that. Before we jump into Jimbo, I want to show off the, whatchamacallit. Here it is. So this is the fails delivery dates. Basically what this is looking for, I think I'll open source this sometime in the near future. Basically what this is looking for, I'm going to clear everything else up from here and grab a drink. So basically, God damn it, I need to stop. Sorry, I'm a little hippity hype from just looking over this from earlier. So you have an option in here called threshold for FTD to float. Anytime that the float of a stock is traded in one day, there's a little flag inserted on that day, and then 7 days after that, 21 days after that, 35 days after that, and 130 days after that, there will be a zone created as a background, and you can see this here. Anything in red is T plus 7. Anything in green is T plus 21. Anything in yellow is T plus 35. Anything in white is T plus 130. The whole entire logic behind this is if you have the entire float of a company traded over in a day, you can assume that there was a lot of short interest involved, as well as short exempt volume. So when you get to your T plus 6 level, this all has to do with short exempt volume being accounted for, so they have to locate the shares within T plus 6. T plus 21 all has to do with a combination of short exempt volume, as well as options, as well as FTDs. That is typically your midpoint for vanilla fails to be delivered. T plus 35 is the latest that you can have a rolled fail be delivered. And then not too long ago, I came across something of, it was a data set for securities lending. And the most common term for a securities loan taken out is about 6 months, believe it or not. So the 6 months actually plays out really interestingly here because you can see where you have volume from 6 months prior being accounted for, or shorts rather. That's seemingly what drove the move in early to mid-August of last year, as well as the move from May. All of that was triggered from back in January. If you use this lens, obviously there's a bunch of different ways that you can interpret it. But either way, a very interesting little tool to use. This is also on TradingView. You can look it up. It's called FTD due dates, or you can just look up my name on TradingView, that guy Astro. Yeah, so that's AMC. Let's go to Jimbo. Also, the threshold for FTD to float, that's basically the total shares outstanding times whatever number you have put in here. If you set it to 0.5, then it's half the float traded over a day that it will signal your due dates. So I'm going to put it to 0.8 for Jimbo because this is having just a ludicrous amount of volume not showing up. This does have to do with DRSing, I believe. I unfortunately think that DRSing is not as great as people think or claim it is to be. Because it's basically they're a component member of the FAST. Fuck, there's so much stupid fucking shit in this market. FAST is a particular agent / conglomerate to the DTCC. If you're a FAST agent, then you're basically like a liaison between shareholders and the DTCC. But the DTCC still has the presiding rights over those shares. They're still electronically entered I'm going to make a different video that's dedicated just to DRS. If you've DRS'd, I'm not saying you're fucked. If you're not DRS'd, I'm not saying you're not fucked, and vice versa, and every other combination. I still don't know enough about it, but I've had enough time to dig into it and read into it that at least I can give my opinion, and then you can do what you want with that. Just like any form of research, you're allowed to think whatever you please and fucking listen to whoever you want. I'm not telling you what to do. Fucking mouth is getting dry. Okay, so Jimbo. I'm actually going to get rid of the FTD thing real quick. Okay, so same thing as AMC, but GameStop has actually shown a lot more strength since its consolidative move. It's still riding the distribution speed lines, which is incredible. My original point that I was getting to about 2 minutes ago about the ludicrously low volume is when you're using the FTD indicator, that's when you would want to modify what the threshold value is. Because the lack of volume in GameStop, I think, is showing just how much of the float is locked up. And that's for good reason. It has a tenth of the float size as AMC. And I think that DRS is also a part of the symptoms at play. But nonetheless, the amount of strength that it has shown is just absolutely stand up. Holding on to these distribution lines is incredible. If it was truly consolidating and undergoing another phase of accumulation, it would be around, I would say, the range of 140 down to 110. And even that, it's nowhere close. So going to the 5 minute, it looks great. It's also in the middle of a descending wedge on low volume. And if I hide everything, you can clearly see this is just pure accumulation at a distribution level, which is reaccumulation, which typically means that it's about to go into distribution again. It's a great looking chart. I love the way it fucking looks. It makes my dick hard. And again, just symptoms of accumulation. The lowest part of the trading ranges are being held, and you see a very calm, nice back and forth of these levels where the trend is being held down, so that composite man or whoever you think is at the end of your fucking trade is able to buy shares at a very low premium, and then eventually will be marked up, in which case they will sell. Yeah, classic cock and ball fractal playing out here. And it's also, in terms of fractals, very reminiscent of late May and early June. This is almost a copy and paste of what was taking place back then. If you pull up the Wyckoff Snipper Sniper, you can even see, hopefully the screen is big enough that you can actually see this, where the springs, I'm going to change the color, where the springs are marked. What's a color that stands out? Fuck. Pink? Purple? Fuck. There's too many fucking colors all over the place. I don't fucking know. Blue. Okay. So you can see where the springs were recorded in the past and how now we have just a bigger instance of that. So if you're 1, you're 2, you're 3. This is actually also a 1. It just wasn't picked up. 2, 3, you're 1, you're 2, you're 3. And just the magnitude of the trading ranges, I think, is demonstrating an even higher price target to this next run, as well as just holding on to the distribution lines is just fucking insane. Because again, like with AMC, GameStop had 110, 120% move in the same time frame. It reached a low of $76 and went all the way up to 200. So that's almost a 3 times 200% move. Fucking massive. And you can also see again where it got rejected. Wyckoff Sniper doing its due. Fucking insane. So going into the week, same thing with Amy. either we're going to see more accumulation or we're going to see another blast off. And if that is the case, the line that we will draw for some explosive movement is around the 170 range, because this line that it was rejected by will go down over time. And by the end of the week, it will find itself at about 170. So in the meantime, though, it keeps writing the distribution lines below that on the shorter time frames. And it's about to converge into the pennant that it's in. So probably something like this. And it'll probably shoot down and shoot up. Something like that. I don't know. Go fuck your mother. So yeah, that's the nickel tour. Hopefully y'all enjoyed. Per usual, like, sub, fondle my balls, everything and whatever. I think it's going to be a good week. I'm very excited. We'll be loading up on more calls. So in the meantime, love y'all. Stay funky fresh. Fucking love you. And stay black.